Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on XLK, Apple, and Facebook. Another wild day for the tech sector today. Pretty much a mirror image day of what happened last Wednesday, except this time we closed weaker after the bounce played out. Look at the hourly time frame, compare Wednesday to today. We saw the dump, we saw an oversold short-term bounce, we rejected from hourly exponential resistance. Rather than closing right in the middle of the bounce range like we did on Wednesday, we closed near the low of the day today, favoring the bears for further pullback. This is not just window dressing at the end of the month. This is sector rotation going on. Look at the volume. There's a lot of volume leaving the sector. We have lost the daily higher low pattern. We're looking at this gap of 61.16. And we are seeing money shift around. We're seeing money leave the tech sector, go to the financial sector, and go to other places. This is the most significant bear volume we have likely seen in 2017 in a short amount of span. And just comparing to the last 3 months, you see there's nothing even close to this amount of bear volume. So the weekly time frame, potential volume climax signaling the temporary top last week. We're following through with that this week. Potential to lose the exponential moving average supports for the first time in over 4 months. And we're looking down at support of 60.25 on the weekly time frame. Apple is one of the strongest names, along with Amazon, in the tech sector just in the past couple days. So we held up pretty well. We did reject from the daily middle Bollinger Band, but the fact that we didn't even break the low of Friday is a good sign for the bulls. 168.50, 167.16 are supports. The bulls are not going to be immune to weakness in the sector. They're definitely going to correlate with it, but they're holding up better. And we'll look at some other names here, but just comparatively, every other name that I'm watching in the tech sector has broken the low of Wednesday with some bearish action. So not the case for Apple. Still a very healthy weekly chart. If we break 167.16, the weekly middle Bollinger Band will be our next short-term target. Facebook on the daily time frame, that's more like it in terms of what we're seeing in the sector, which is comparative to Apple, nowhere near as weak. Or Apple's nowhere near as weak. So Facebook dumping down, breaking the low of Friday, closing under the 100-day moving average support. We're now looking down at 168.89. After that level, 168.29. So it's all bears with lower highs, rejecting from exponential resistance, increasing bear volume, and a close near the low of the day. The weakest tech names right now are Netflix and Google. Amazon and Apple are holding up the best, and Facebook's right in the middle. That's where we stand with the sector. We are very cautious. The weekly time frame for Facebook has the potential to lose the middle Bollinger Band for the first time in 2017. The higher low pattern on the weekly, it's all about 168.89. Bearish TCG cross on the verge here for the first time in 2017. So anytime we're saying first time in 2017 and talking about bearish indications, we need to start paying attention. And we're seeing that with the tech sector, and the volume climax last week was a potential signal, and now we're seeing some follow through. If we see more red tomorrow, we're looking for hourly short-term oversold bounces, but the bears have control in terms of momentum, and we'll see how long that keeps up. I appreciate you watching, and we will see you tomorrow.